All right, back to work. Hope you guys had a fantastic weekend. Let's make some money this final week of February. Boy, markets are rolling over hard here tonight, and hopefully this is that deep pullback we've all been waiting for after that big run higher last week. But these can be tricky situations, right? We know we're bullish overall. We want to buy the dips this week, but this pullback is looking pretty mean, right? These bears are not messing around. In these situations, there are two specific types of trades, setups I look for the following day. I'm going to cover both of those trades, why I like them, how to trade them. By the time we're done tonight, you'll have an easy, simple roadmap to make some money on Tuesday. Before we jump in, though, and talk my favorite trades here for tomorrow, make sure you subscribe to the channel. Hopefully by now you know you don't want to miss tomorrow night's video, so make sure you subscribe to the channel. And if you enjoy these lessons, if you like these videos, do me a favor here, will ya? Hit that like button for me. Give me a shout out. Give me a hell yeah down in the comment section. Thank you so much for stopping by the office, tuning in, supporting the channel. But enough of the intro, Joe. Tuesday is not going to trade itself, and we only have a couple days left of the month of February. Boy, what are the markets telling us right now? NASDAQ and the triple Qs are ready tonight. S&P and the SPY is ready. Like I mentioned in the intro, we know we're bullish overall right now. Look at the size of that move on these 60-minute time frames. Now, that big move, that big move we saw last week is one of three really important clues. The rest of these clues are on the tick chart. We'll drill down in a second and talk about tick charts and fill in the blanks on the rest of these three important clues. Now, before we do that, though, let's double check our schedule for tomorrow. There are two big news events on my radar tomorrow that you want to be aware of. One, of course, is that durable goods orders at 8:30 Eastern Time. The second one, of course, is the consumer confidence number at 10 o'clock Eastern Time. Anytime I see major red star news like this at 10 a.m. Eastern Time, I always pay attention. Our best trades oftentimes come after big news at 10 o'clock Eastern Time. So keep those two items on your list. And number two, the biggest news of the week is on Thursday, the personal income number, PCE number, that inflation number coming later on this week. So we have a lot we're going to talk about as we go to the end of the month volatility and we start buckling in for some inflation data coming later on in the week. But keep that in mind for tomorrow, 8:30 durable goods. Consumer confidence there at 10 o'clock Eastern Time. You better be at your desk tomorrow around that 10 o'clock hour. And, of course, we'll do it together tomorrow morning in our trade room. Back to our charts, though. It's good to know when the news is, but the money is made on the charts. Let's now dive in. Let's talk my favorite trades here for tomorrow. S&P's ready. NASDAQ's ready. Hopefully you are ready right along with us. We're all bullish overall right now, but the size of that move, right, is one of three important clues right now. Let's now drill down to our tick charts. Tick charts are going to give us the rest of these important clues that, in my eyes, they kind of make our game plan pretty easy here going into Tuesday. There are three main clues right now on these charts. One of them is that big move higher after the NVIDIA earnings we saw middle of the week last week. Now, why is a big move higher so important? Well, because I know that last week the marks kept going up and up and up, but in most cases, historically speaking, nobody wants to buy high up here. Anytime I see a big move in one direction, I want to buy low. And my definition of buying low is a two-legged pullback. And of course, in my free video classes, we talk a lot about measured moves. These will usually go a little bit more than a measured move. If you guys are familiar with measured moves in the free trading course. So the one big clue here is that big move higher. Let's buy low, right? Let's buy low. Don't buy high. The second clue, very important, is a previous range breakout. You can see a better example of this on the 60-minute chart, right? These were some ranges here, and we're now breaking out of that range and potentially for a breakout pullback zone. If we drill back to our tick charts here, that breakout pullback zone is right down around that 50.66 area, 250.54, right? This is that prior trading range. This, of course, now is that breakout pullback. Another topic we talk a lot about in our free trading classes is whenever we see a range breakout, we like to look for a breakout pullback, and that breakout pullback is right below us here, 50.66, 50.54 area, give or take a couple ticks. The most important clue, I think, though, though, is the third clue. And that, of course, is the most recent range, and we call rotation off the high. The market pops up, goes into a trading range, you'll notice. And again, we talk a lot about this in our free video classes. Ranges love to rotate. So we pop up, we go into a trading range, we run higher, and now we are rotating off of this high. Now, we call these pendulum swings, the amount above the range can that project down below the range. So this is really, really important, because knowing that we have a range and rotation off the high, we know two things. One, we know roughly where the market's trying to go. They're trying to take out that pendulum swing on the opposite side. That lines up beautifully, as you can see, with that breakout pullback zone and that two-legged pullback we talked about a few moments ago. But the most important part of a rotation off the high is that this is all bearish right now, right? We are definitely bullish overall, but if you just look at the last, day and a half or so, this thing is all bears. So bears have all the control over the short-term momentum. I mentioned earlier, whenever I see situations like this, there are two types of entry patterns I look for. Both of those entry patterns have one job, and that is to trap in sellers as this runs lower. Remember, it's very bearish in the short-term momentum. So nobody has a crystal ball. For all I know, it'll keep on going and going and going, right? And keep going. And later on in the video, I will talk about how to short this thing if it does keep going lower. So we'll talk about that in a moment. But the key is, because we have all of this bearish momentum, but again, we're not a bear market overall, we're a bull market overall. My goal in these scenarios, the overall kind of overarching goal, is to get it going lower, trap some sellers in, and squeeze their stops, and ultimately stop them out, right? Run their stops to turn that momentum back over here for the buyers. And to do that, there are two patterns we look for. One is called a crown reversal, right? Crown reversals. Now, we have a lot of these inside the free trading course. If we understand this market wants to take out that pendulum swing, if we understand the bearishness overall, then we also know that as we go lower, this is not a good place to be selling, right? This is a horrible spot to be selling. But because we're so bearish in the short term, we assume there will be some rookies coming in who don't know how to read a chart. They're not quite educated yet on that, and this is where we can trap them in. Now, watch closely. I don't have a crystal ball. I don't know how far this thing will go. What I do know, though, is once they pull back and I see bears try once and go higher and try again, I'm going to look for this very specific type of entry pattern. Watch closely here. It's a higher high in price and basically a bear trap down below that low. I call these crown reversals. What this does is it traps the bears in. It seeks to use their stop losses, right? Their stops as fuel. Remember, we're very bearish in the short term. I need those stops to fuel this market running higher. But most importantly, though, we know that anytime we have all of that momentum for the bears, there's always that chance the price will pop up, hold the underbelly of that trading range, and roll over and take out that low again. So I want to make sure I use that bear trap or that crown reversal to buy as low as I possibly can. I do not want to be buying as it goes higher for tomorrow, right? Again, the most important factor is this short-term momentum. So the way you do it is you trap those bears in, you use a crown reversal, basically a bear trap pattern, and you buy into those stop losses. Now, one of my favorite trades is when it rolls over and retests that low. If you watch my videos a lot, you know how much I love double bottom reversals. Think about this, right? It's an overall bull market, but a lot of momentum, right? Coming off that high right now. Do not be surprised if we get our 1-to-1 profit target. We get the risk off of the trade, move stop the point of entry, but the bears come in and they hold the underbelly of that range. Happens all the time. if I sell short on that breakout pullback, if I sell short up here, where's my target? My target is back down where to retest that low. Now think about it. These are rookies, right? Chasing it, going lower. Professionals are not going to sell low like this. Do it again. Now, on this time around, on a double bottom reversal, now we will have absorbed most of that bearish momentum. We don't need a crown reversal pattern any longer. I wouldn't hate it, but I don't require it. All we want right now is that two-try failure pattern. We see a lot of these in our free video classes, right? 2 tries here. Now again, once they retest the low, we now already have the bears committed, right? They're now taking their profit at that low. I don't need a crown reversal. I can be more aggressive on this one, what we call a failure pattern. Failure patterns, all they do is they run the stops, right? All they do is they run stops. Again, we're going to squeeze those bears, hit those stops, and run it higher. Now remember, this range overhead is a magnet. We're still a very bullish overall market. Buyers want to go back up and take out that high, right? Big move, two-legged pullback, and a retest of the high. Bottom line is, if we start squeezing and ripping higher, this one entry pattern I'm going to look for as the market goes higher. I don't want to buy high. I want to buy low. And to do that, I'm going to use a simple bear trap. It's a higher high in price and a trap right below that low. All right, guys, keep this recipe, keep this 1-2 punch on your radar for tomorrow. We'll let the market go lower. We'll trap those bears in, use that crown reversal. Remember, buy as low as you possibly can on the initial move down, because again, oftentimes it will hold the underbelly of that range, come back and retest that low. Once it retests the low, trap those rookies in. This one's a 2-try failure, and then as it goes higher, the market wants to take out those highs. The entry I look for is that bear trap entry, that higher high in price, and that trap below that low. Now, let's slow down for a second, because I know that most of you guys have learned these patterns. You've taken my free video classes. You're making money with bear traps, crown reversals, 2-try failures. But if you're watching for the first time right now, this might be a brand new language for you. I do things a bit differently here on this YouTube channel. So this is brand new to you. Don't you worry. I teach all these entry patterns. I have hundreds, if not more, examples of crown reversals and bear traps and failure patterns. And I teach everything inside our free trading classes. I'll put a link up top here for you. Upper right-hand corner, grab a little pop-up link there that popped up there and take that free trading course, because the strategy you'll learn in that video series will teach you a simple trick we use in our members trade room to know exactly where the best winning trades are going to be each day. Then to help you start making money on your own, I'll teach you 4 of my favorite entry patterns. If you're not making consistent money right now, if you're missing the best trades each day, if you're struggling to qualify for a funded account at Top Step or Apex, hit the link up top there. Take that free course. It's perfect for someone trying to make the jump into full-time trading. And the roadmap you'll learn in that video series will make it easy for you to know exactly where the best winning trades are going to be each day. So if you can't get the link up top there, I'll put all the important links in the description of the YouTube video. I'll put the free class links down there. We trade together every morning in our trade room. I'll put the trade room membership links in the description as well. And if you're on Twitter, I post a lot of updates on Twitter each day. If you're on Twitter, give me a follow. All the details before you down there in the description of that YouTube video. Make sure you take that free video class, because you'll see a lot more examples of how we trap in sellers. More importantly, though, you'll see the difference between a crown reversal. Again, crown reversals are great because you're buying nice and low. But if they roll back over, if they hold the underbelly, roll back over and retest, there's a small difference there between a crown reversal and a failure pattern, right? One is a lot more aggressive. A failure pattern is a lot more aggressive because you can be more aggressive, right? With that strong run down like that, they're trying to retest that low. That's what bears want to do in a short-term move like this. So we buy low with a crown reversal, a technical bear trap there, and of course a 2-try failure going higher, and then obviously a technical bear trap as we go back up, because again, we want to buy as low as we can. All right, guys. Now, one more variation of this, and then I want to talk about how would I sell this market. Again, a bit later on in the video tonight, we'll talk about how would I sell this. What if it drops and keeps going? How do I short a market like this? Very carefully. We'll talk about that here in a moment. But first, though, I love the idea. I love the idea of that crown reversal, that double bottom reversal. But sometimes we don't get it. Sometimes all we get is a V bottom. These are not my favorite. They're definitely not the most desirable because, again, I don't have a crystal ball. I don't know how far that move down is going to go. I can't make it a point of trying to pick a bottom. Picking bottoms like that is a rookie mistake, right? So how do we time the entry on this? Well, whenever we have a V bottom like this, we almost always see something like this where it'll V bottom off that low, it'll pop up, and then begin to grind and go higher. And these are pretty simple. What you don't want to do is you don't want to chase this thing as it goes higher. Because again, remember, when you have all that bear momentum like this, what's going to happen is the sellers are going to come in, they're going to try to hold the underbelly here and run this thing back down again. So you don't want to chase it as it goes high. Remember, this is a very specific situation. We're bullish overall, but a very short-term bearish move. That's the trick, right? The short-term bears are the tricky part of this, right? So as the market goes higher here, if it begins to grind going higher, we don't chase after because, again, we're walking right into a bull trap. What we're going to do is we're going to draw a trend line off the highs, bring it down off that low, and then what I always do is I look left and I find some prior swings. Find those prior swings, and the goal is to time the entry. Usually any of the entry patterns you guys learn in our free video classes, but you want that first test. We talk a lot about this in the free video classes. The first test is the best test, okay? Look again how I draw that channel, right? I draw it off the highs, I pin it down at that low, I then look left, find some prior swings. This is usually where our best entries are going to be after a V bottom, all right? V bottom, again, kind of bouncing right up off of the low of that area. All right, guys? So that's my game plan as we go lower. Again, trapping those bears in, anticipating that attempt to retest the low, and if we do retest the low, double bottom reversal is always my favorite to buy off that low going back up into that trading range. Now, here's a question. How do we short this thing, right? How do we short this thing as it drops? And how do we short this if we do end up popping up and back down again, right? This, again, a lot of bear momentum, but I'm an overall bull market. So how would you do this? Let's grab the NASDAQ here now. The NASDAQ is very similar here to the S&P. Again, we're pretty bullish overall, no doubt about that on the 60-minute time frame. That's a very big move going higher. That big move is one of three very important clues, much like we saw on the S&P. The one big difference in the NASDAQ, though, is you can see that big area of resistance. It does look like that previous range right in the middle will be a great spot here for a breakout pullback, and a lot of this stuff will be similar as it was on the S&P. Let's go look now at the tick charts. This, of course, now is a 4,000 tick chart. You can see, of course, all the time frames up in the upper left-hand corner. And if you're watching for the first time right now, that is the 21 EMA, in case you're tuning in for the first time. Again, tick charts make everything easier. We trade off tick charts every day in our morning trade room. The NASDAQ has a similar situation, right? It's a very big move higher after that monster blowout earnings from NVIDIA last week. Again, I do realize that last week the markets kept going up and up and up, but historically they're not going to keep going up and up and up every day. Whenever I see a big move in one direction, I don't want to buy high. I want to buy low, and that usually means a two-legged pullback. Now again, two-legged pullback, think about a measured move and think about a little bit more than a measured move. It's a very, very accurate, very consistent way of finding a deep pullback, a two-legged pullback after a big move. This is your previous trading range, right? There we saw that on the 60-minute time frame. There's that previous trading range and that range breakout pullback area. And again, I think the most important clue right now is this bear move down into that trading range. When we end up spitting out the other end of that trading range, right, this is going to feel it will be very bearish in the short term. Whenever we see a strong breakout down like that, we have to anticipate that as it pulls back, the bears are going to try. They may not be successful, but they're going to try to retest that low. That's why we're going to use things like crown reversals, things like bear trap, two-try failures, and buy as low as we can. We don't want to buy as we go higher here, right? That's the key here until something changes. Now, the game plan is pretty much the exact same thing on the NASDAQ as it was on the S&P, right? It's that crown reversal, which again is a higher high and a trap below the low. It's that two-try failure, which again could be a crown reversal, not required, but certainly wouldn't complain about that, into that bear trap, that higher high in price, that trap below that low, going higher. And again, if we were to V bottom off this area, although not my favorite, my goal would be to draw a trend line off the highs like this, right? Find that channel and don't miss that first test around a prior swing off the low of that channel, right? Those V bottom reversals we talked about a moment ago. The big question now is, how do we sell something like this? Well, what's our problem, right? As we go lower, right? As we go lower, what's the problem? The problem is we're overall bullish. So I'm going to make sure if I'm selling on the way down, I want to sell as high as I possibly can. How do you do that? With a bull trap. Always going to be a bull trap in these scenarios. Now, what's a bull trap look like in situations like this? It's a strong run down, it's a shallow pullback off the moving average, and a lower low in price. Okay, you must have that lower low in price, because at that point, that becomes a swing high. Once we poke our heads above that swing high, remember, we don't blindly trade, we don't blindly buy or sell. We wait for the proper signal candle. You'll learn more about the proper signal candle in the free video classes. Again, links are up top there in the upper right-hand corner. But that will give you, right, that will give you that, basically it's a bull trap. It's a lower low in price, a technical bull trap pattern. We teach a lot of this in the free video classes. So as we're going lower, I want to sell as high as I possibly can. Why? Because we're overall bullish. I don't want to sell as we go lower. Okay. Now, what may happen is we may end up running lower. And like we talked about earlier, we may end up running lower. We may get a beautiful crown reversal off of that low. We may get a nice bounce up here, some nice easy profit right as we run back up. But again, the underbelly of these ranges, they love to hold when momentum is this bearish in the short term. So how would you sell up here? Well, remember, we're overall bullish, right? So the key is to trap in those buyers. It's very simple. We saw one right here earlier today, shortly after, right? There's one right there as well. As we pull back, right? As we pull back, remember, I don't know. This may keep on going. And hopefully it does, right? Hopefully we get that crown reversal, and hopefully everybody gets a big paycheck, right? It runs all the way back up and retests the high. But the odds aren't that good for that. What's more likely is we take out the underbelly, the buyers now come in and they foolishly chase this thing higher. They try once, they try twice, and we can now use their stops to fuel that run back down again. If we're lucky on this, it'll be a two-try failure. Buyers once, buyers twice. Then as it rolls back down again, how would you add to your position? Again, if we're lucky, we may not get this part of the process, but if we end up going lower, find that lower low in price, you got it, and that bull trap going back down to retest the low. Now remember, profit targets are easy at that low. We're not an overall bear market. We're an overall bull market. So profit comes off at that low. Remember, we do not want to sell down here, right? That's the last place I want to sell. I want to sell high. I want to sell high with basically bull traps, right? Selling high as possible. I don't want to sell low down here. But if we get some rookies who are not watching my YouTube videos or can't keep their fingers off the buttons at the wrong times, if those rookies come in and they begin selling once and selling twice, I can now use that failure pattern to squeeze those stops and run higher. So think about that scenario, right? Again, we have to use that bear trap, that crown reversal, that higher high in price, the trap below that low, because I have to buy as low as I possibly can. The reason I do that is because, again, as it goes higher, I'm anticipating now be bears up here, shorting at the top of channels, shorting the underbelly of that trading range. Again, I'm not going to buy it like that, right? I'll buy that bear trap if we get it going higher. But if I start seeing buyers struggle once, struggle twice, we now know exactly where their pain is. We know their stops are. Again, these are rookie buyers, right? Buyers, we're not buying high right now. We're going to buy as low as we can. That is buying high. You can easily see it on this illustration. So we don't chase after it, right? Let the rookies do that and simply sell into their stops. And if we're lucky, we'll get that little bull trap pattern on the way back down to retest the low. My favorite trade out of all of these, always, 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 is that double bottom reversal. And the reason why is because, again, when you get these big moves down like this in an overall bull market, it oftentimes pops up, retests the low, people take their profit, rookies chase after it, and this is the one that oftentimes squeezes and really, really rips and runs higher. Oftentimes the most lucrative trade of the week is a double bottom retest or double bottom reversal. All right, guys, that is the name of the game for tomorrow. If you're buying tomorrow, buy as low as you can with bear traps, right? Trap them in and squeeze their stops. If you're selling tomorrow, sell as high as you possibly can. On the way down, right? On the way down, it is that bull trap pattern, that lower low in price and that bull trap, or it runs lower, pulls up, trap the buyers in. We know the strength of that move, wants to retest the low, trap the buyers in, use their stops to time the entry, right? Don't just simply pick the top like that. That's rookie's game, right? Wait for the buyers to commit and then squeeze those stops, sell right into those stop loss for that run back down to retest the low and keep an eye out, right? Keep an eye out for that double bottom, that two-try failure, right, off that retest and squeeze that sucker back up again. This could be a very fun day tomorrow. That's the plan, though, for Tuesday morning in our trade room. Speaking of which, don't forget, tomorrow morning, 8 o'clock Eastern time, come trade it with me. The easiest way to start making money, consistent money in these markets, is come out and learn this and trade it with us every morning at 8 o'clock Eastern time in our trade room. I'll put all the important links you need to get started. I'll put all that in the description of the YouTube video. Any questions, any comments, any issues getting started, don't be afraid to call the office, use email, use live chat. We're always here to help out, standing by to answer questions along the way. All right, guys, a fantastic day today. It's been a fantastic month of February so far. One more day coming tomorrow. Will we get that bear trap, crown reversal? Will the bears take it lower for that double bottom retest? Only time will tell, but now we have the game plan we need. Now get out of here. Enjoy your evening. I will see you tomorrow morning, 8 o'clock Eastern time in the trade room. If not, same time, same place tomorrow night. We'll do it all again and get ready for Wednesday. In the meantime, be well, be nice to each other out there, and you better be here next time. Adios, amigos. Bye-bye for now.